Thank you for watching this video. Today we will be doing technical analysis on the stock market for Tuesday, November 24th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals at simplemarketsignals.com. Today was a record-setting day in the stock market on multiple levels. So we're going to spend a few minutes looking at this. This first chart that we're looking at is a one-day, one-minute chart of the Dow Industrial. So this is the actual index itself. The blue line is set at 30,000. So this is the first day ever in the history of the Dow where we traded above and closed above the 30,000 level. The Dow was up 1.54% today, and we closed at 30,046.24. So an absolute record-setting day. I don't, as you guys know that follow my channel, I don't often look at the Dow itself, but I wanted to pay special attention to this record-setting day today. And on this next chart, I want to point out something. This is kind of fun. So as I alluded to, I was a VP for a major mutual fund company, and I received a text today, and I want to read this text to you because it's kind of fun. And this came in from a buddy of mine at 1:29 this afternoon. Okay, and he writes, he says, "Rodney, back in 2009, I remember you emphatically preaching Dow 30,000. Well, here we are. Hope all is well, my friend." And then he signed his name. So keep in mind, guys, back here in 2009, okay, when I was working with financial advisors, and I've worked with thousands of financial advisors all over the nation. They were my clients when I was with the mutual fund company, all right? And I was doing lunch presentations, and in the depths of the downturn in 2009, with the Dow well under 7,000. Hopefully you guys are seeing this 15-year monthly chart, by the way, of the Dow. And so with the Dow clear under 7,000, I was talking about Dow 30,000, okay? And one of my financial advisors, still a friend of mine, right, and still in touch, obviously, he remembered that, and he sent me that text today. So I just want to kind of throw that out there on multiple levels. Number one, it was very fun for me. So Brian, if you're listening, thank you. But this is the type of things that I like to do for the people that want to work closely with me, okay? So just kind of keep that in the back of your mind as we move through this presentation. I want to encourage you, if you're not already a subscriber to this channel, subscribe to this YouTube channel, but also seriously consider working with me as a subscriber to Simple Market Signals, and I'll tee up some more information about that here at the end. But keep in mind, and I'm proud of this, right? I'm proud of this, the fact that, you know, over a decade ago, these guys remember me talking about this Dow 30,000, and a lot of them thought I was crazy back then. But here we are, right? We hit Dow 30,000 today. So it's a lot of fun. It's a lot of fun to go back and reflect on a lot of the work that I did over a decade ago, and the fact that it still impacts people and they still remember it today. So thank you for letting me share that with you. But a record-setting day here again, Dow 30,000. So we finally made it, and this is a 4-month daily chart of the Dow, and I just want to kind of revisit this. So again, first day ever above 30,000, and not only was it a record-setting day in the Dow, we also set a record in the S&P 500. So this is a 4-month daily chart of the S&P 500. S&P 500 up 1.62% today, and we made another all-time closing high, daily closing high on the S&P 500. Not a milestone, you know, like a 30,000 on the Dow, but a record high in the S&P 500 all the same. And again, huge days, guys. I mean, when you get these 1% or more up days, 1.5% up days in these major indices, man, this is huge. These are big moves in one day. And this blue line is set at 3,600. So this is the third day ever that we've closed above 3,600. There's 1, 2, and 3. So the third day ever that we've closed above 3,600 on the S&P 500. But it was an all-time closing high, closing at 3635.41 on the S&P 500, up 1.62%. And we made an all-time closing high on the Russell 2000. We were up 1.87% on the Russell 2000. This is the IWM, the ETF that tracks the Russell 2000. But you can see here that we made another all-time closing high on the Russell 2000, up 1.87% today on the ETF, the IWM, that tracks the Russell 2000. So an absolute record-setting day in the stock market across the board. The question now becomes, have we gone a little too far, too fast? Only time will tell, but we can't expect 1.5 to almost 2% days back to back to back in these markets forever. At some point, we're going to have to take a break here, pull back, and probably give back at least a little bit of these gains. So with that said, if you like the idea of having an advantage when it comes to the stock market, if you like the idea of knowing when the stock market is most likely to go up, go down, or go sideways, if you like the idea of that, if that appeals to you, please pay close attention to the rest of this video. Let me ask you a question. Do you have a stock market risk management system? Something that helps you understand the various risk levels in the stock market on an ongoing basis? Do you know when it's safest to be in equities? Do you know when it's most dangerous to be in equities? Do you know the direction of the short-term trend on an ongoing basis? Do you know the direction of the overall trend in the stock market? My system is called Simple Market Signals. Simple Market Signals is market-based. There's no opinions, forecasts, or guesswork in Simple Market Signals. It took me over 20 years to develop Simple Market Signals. I developed Simple Market Signals by reverse engineering the stock market, and I studied the stock market over numerous time frames, including in numerous bull and bear markets. And what I found is that certain conditions exist during these various market phases. And then based on that information, I created simple, easy to understand signals around these different phases of the market. And the thing is that most people don't know about or have access to the data necessary to do the research that I had to do to put together this model. Now let's take a look at the signals. The red signal has the highest equity risk associated with it, and the worst sell-offs, including bear markets, will happen when the signal is red. When the signal is yellow, this means that equity risk is moderate, and sideways to slightly up or down price action is very common during a yellow signal environment. The green signal is the best signal. It has the lowest equity risk associated with it, and most all upward progress in the stock market will be made in a green signal environment. Said another way, it is very hard to make money in equities unless the signal is green. Okay, a quick refresher on the Simple Market Signals weekly signals and how they can help you. The signals are green, yellow, and red. The green signal is the best risk-reward ratio for equity investors, and what you're going to find is that the stock market makes most of its upward progress when the signal is green, okay? The worst risk-reward ratio signal for equity investors is when the signal is red, and what you're going to find is that bear markets and the worst downturns in the stock market happen when the signal is red, like during the 07 through 09 bear market, as we see here. So again, the best risk-reward ratio signal for equity investors is when the signal is green, and the worst risk-reward signal for equity investors is when the signal is red. Now let's take a look at the first 3 months of 2020 so you can see how Simple Market Signals could have helped you in the most recent downturn. We know that we came into the year with a strong stock market, so we had a green signal for the majority of January, but on January 27th, the signal went yellow for a couple of weeks. We went back to green in the first part of February, and I warned my newsletter subscribers on Saturday, the 22nd of February, that I felt like the market was starting to roll over and that things were changing. And so I gave people a heads up right here over the weekend, and I told them that if the market continued to sell off, that we would probably see at least a yellow signal, if not worse, the following week, and that's exactly what happened. On the 24th, the simple market signals risk signal went yellow. Now, one of the other things that I want to point out here is, in addition to the risk signal, I also have several trend direction indicators in this simple market signals model. Now, the longer term one is called the general trend indicator, and the general trend indicator went negative on the 25th. So on the 24th, the signal went yellow. The general trend indicator went negative on the 25th, and then 2 days later, the signal went red. The risk signal went red. So think about this. All in 1 week, just a few days apart, we had a yellow signal, we had the general trend indicator went negative, and then we had the risk signal went red on the 27th. That was Thursday, all right? And by the way, this general trend indicator is a positive negative signal, and it operates totally independently of the risk signals. It's just trend. So the general trend indicator gives you still another way to monitor and control risk in your portfolio. And guys, that general trend indicator had been positive since October and then went negative. So right there, just those two signals alone told us that something was changing in the stock market. And then by the 27th, the signal had went red, and we can see here that the market fell from there. As part of the simple market signals model, there are three powerful indicators. There's the simple market signals proprietary risk level signal. There's the short-term trend indicator, which helps clarify short-term moves in the overall U.S. stock market. And a normal signal length for the short-term trend indicator is anywhere from 1 or 2 days to 7+ weeks. Then there's the general trend indicator, which is designed to stay positive during the bulk of most uptrends and negative during the bulk of most downtrends. And a normal signal length for the general trend indicator is anywhere from 2 weeks to 5+ months. We disseminate the information through the Simple Market Signals weekly newsletter. In the weekly newsletter, you will receive the proprietary risk level signal on the overall U.S. stock market. You will also receive the proprietary risk level signal on all 11 major sectors of the S&P 500. You will also receive the short-term trend indicator signal. You will also receive the general trend indicator signal. You will also receive market and sector performance information over multiple time frames. You will receive a recap of what happened in the stock market for the past week. You'll also receive technical analysis information, fundamental analysis information, and yield curve information. There is a ton of information every week in this Simple Market Signals newsletter. And a subscription to Simple Market Signals is just $19.95 per month. That's less than 67 cents per day. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. And guys, I want to set realistic expectations here, okay? The newsletter isn't fancy. It's effective. It's plain text, no color, no fluff. And please note that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, that is just due to international compliance regulations. Now let's recap what you will get with your Simple Market Signals subscription. You will get the weekly emailed newsletter with all of the contents we just talked about. You will also receive special midweek updates when warranted. So if there's a major signal or direction change in the middle of the week, we're not going to wait until the weekend to get you that information. We're going to get that information to you as soon as possible via a special midweek update email. The best fit for a Simple Market Signals subscriber is an investor or trader with at least a 6 to 8 week plus time frame that they're focusing on. If you're a day trader or a really short-term trader, Simple Market Signals may help you a little bit, but the reality is Simple Market Signals is designed for those investors and traders with at least a 6 to 8 week plus time frame that they're focusing on. And if you would like even more information about how you can benefit from Simple Market Signals, I have the following videos that will be linked in the description box below this video. And to subscribe to Simple Market Signals, you just need to go to the website that you see on the screen here. That's https simplemarketsignals.com. It'll take you about 4 minutes to subscribe. It's that easy. Once you reach the website, the first thing you will need to do is accept the cookies. Please notice that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to use this website or our services. And that is just due to international compliance regulations. All right, so to get started, all you have to do is click this green button, and that will take you to the product page. And this explains, of course, what you get with your subscription. And then just make sure that that says 1, because if there's more than 1 in there, if you have a 2 or a 3, you'll get multiple subscriptions to the service and you only need 1. Click the Sign Up Now button, and that will take you to the checkout page. Once you're on the checkout page, fill in the necessary information, anything that is required, including the email address. Keep in mind that this is an email newsletter, so we will have to have your best email address on file, and make sure this box is checked because that's how your email address gets into the system. So if that is unchecked, your email won't get transferred into the Simple Market Signals system and you won't get your newsletters. So please make sure that box is checked. And then, of course, just double check, make sure that your monthly total is going to be $19.95 a month. Remember that your first 2 weeks are free, so your first renewal date will be 2 weeks after your subscription date. Fill in your credit card information. You will need to accept the privacy policy and check that box that says you've read and agreed to the terms and conditions. Click the Sign Up Now button, and it's that easy, guys. It's probably going to take you maybe 4 or 5 minutes total to fill in everything and subscribe to Simple Market Signals. Now, when you subscribe, okay, understand that everything is tied to your email on file. All right, so once you subscribe, you go out to the website simplemarketsignals.com, and it'll take you maybe 5 minutes to subscribe. It's pretty easy, and you just follow the prompts, and then your email on file is then going to drive everything going forward. This is an emailed newsletter subscription. That's how we disseminate the information, and you should get an immediate emailed confirmation of your subscription. You will also receive an automatic welcome letter that is automatically generated once you subscribe. So if you don't get that welcome letter beyond your confirmation, okay, of the subscription, if you don't get that welcome letter, if you don't see it in your in-basket, then go check your spam, your junk, or your promotion folders, especially in Gmail. Having a lot of people that are having the newsletters and everything coming from Simple Market Signals going into the promotion folder. So please make sure that you check your spam, your junk, and your promotion folders. And also understand that the newsletters go out on the weekend. All right. So the goal is to get it out Saturdays by 2 p.m. But it could be any time over the weekend, depending on how long it's taken me to do the research necessary for that week's newsletter. But I try to get it out by 2 p.m. Eastern Standard Time every Saturday if I can. Again, earlier if I can make that happen. And then the next edition, right, once you subscribe, understand that the next edition, right, so if you just subscribe on a Monday, Tuesday, Wednesday, whatever, the next regular edition is going to be set out on Saturday. All right, and then once you subscribe, we will send you as soon as we can the latest edition, but we have to send that out manually. So just be patient with us. But again, within a day or two of your subscription, if you don't get this latest edition, then go back and check your spam, junk, and promotion folders. Because it's probably hidden in there. All right, so you should get the automatic welcome letter, and then the latest edition within the next day or two of your subscription, and then again the standard newsletter goes out every weekend. But we try to make it no later than 2 p.m. Eastern Standard Time on any Saturday.